Welcome to part 2 of mastering support and resistance. So let's jump on the charts. Mastering support and resistance part 2. In this video, we're going to be identifying the key levels of support and resistance we should be buying from and the levels we should be avoiding. Now, a lot of traders out there, when they're learning support and resistance, will watch a couple of videos and then they'll try and implement it themselves on the charts, and they'll find it's a bit hit and miss. It's a bit, sometimes it works and sometimes it doesn't work. And in my early days of trading, I was exactly the same. I draw my levels and I think, wow, I'm perfect at drawing them. And then some days I'll go and draw it and it just like price just wasn't respecting it. Now there are reasons why that happens and we'll get into that in this video. But this is why support and resistance is very controversial. Some traders will say it works perfectly and some traders will say it doesn't work. Now we'll get into the finer details on which levels we should be buying from or selling from and the levels we should be avoiding from. Now let's just have a quick recap of part 1 and what we learned so far, and then we can then jump on the charts. In fact, we'll jump on the whiteboard, we'll do a demonstration of what I'm looking to teach you, and then we'll implement it on the charts and we'll do some live setups. In fact, I'll actually show you a setup that I took earlier today with the binary destroyer. So what we've learned in part 1 is that you can only move a currency pair if you buy it or sell it. It's the only way you can move a currency pair. Even if you out there believe that price is manipulated and institutions are moving price or retails are moving price or perhaps algorithms, robots are moving price, the only way you can move price is if you buy it and sell it. So if price is in an uptrend, then it means there's a lot of buying pressure, there's a lot of buying orders coming into the market, and a lot of traders are buying and driving that currency pair up. And obviously if price is in a downtrend, it's the complete opposite. A lot of people are selling. So you need to understand the core fundamentals that if you see a currency pair moving, then a lot of traders are trading that currency pair. They're getting into the market. So if price is in an uptrend, you know there's a lot of buyers in the market and you want to be going with that flow, that momentum. So just remember that when you jump on the charts and you see perhaps, I don't know, USD is in a downtrend, that there are a lot of sellers in the market. The momentum is weak. There's a lot of big traders, institutions, retail selling that particular currency pair. So we want to be doing exactly the same. We want to be selling with the flow, the momentum, okay? And the other one is that traders will look to enter and exit trades around support and resistance level, okay? Now again, could be slightly controversial. Traders will say that that support and resistance is only there for institutions to manipulate price, to take out retail. At the end of the day, it doesn't really matter what you believe, okay? What we do know is that support and resistance is areas where traders get excited. They're either entering trades or exiting trades. So we know we're going to be seeing movement, volatility at these levels, okay? That's the most important part, is that majority of traders are looking to enter and exit trades around these levels, okay? Whether it's to manipulate price or they want to profit from it or whatever, we know that they are entering at these levels, okay? So that's what we learned in part 1. That's a recap. Now what we're going to learn in part 2. When will support and resistance hold and when will it fail? This is the very important skill, because again, we need to understand the levels that are likely to hold and which ones are likely to not hold, okay? Because that's a very important subject, because you can draw support and resistance as many times as you want on your charts, but if you don't understand which levels you should be drawing and which levels price is likely to respect from, it's just pointless learning support and resistance. When will the institutional traders enter a trade? So again, we're focusing on the key levels here. Remember, I think it was 97% of the market, of the money flowing into the foreign exchange, is institutional. So institutional are the people and the banks that are moving currency pairs. Only 3% is really retail. So what we want to be doing is focusing on those key levels, perhaps you want to call it supply and demand, institutional levels, key support and resistance levels, whatever, okay? They're levels that institutions are looking to enter and exit their trades, and we want to be doing exactly the same. We want to be spotting these levels and buying into them, and then perhaps selling out of them, or buying out of them and selling into them, okay? But we need to identify these levels. And when do we enter a trade at a support and resistance? Again, we will cover this in more detail probably in part 3, but it is very important that we understand when price comes to a level, what is price telling us? When is the right time to enter a trade? Because you can't just wait for price to come to a level and just assume that, okay, well, I'm going to take a trade from this level. You got to see what price does at the level. How does it react? What is the candlesticks telling us? So this is really what we're going to cover in today's video, and then we will move on to part 3. We'll carry on, and then part 4 and 5 we will start to back test, simulate, and just repeat the process over and over again, so it gets drilled into your brain, and you can start to build up the foundations with support and resistance. So before we get into charts, let's jump to the whiteboard now, and I'll give you a quick demonstration of what I'm about to teach you. Okay, welcome to my whiteboard again, or shall I say gray, I think it's blue, or grey board. We'll call it a grey board. Welcome to my grey board. Now, as we covered in part 1, currency pairs don't move like they do in textbooks. You know, if you ever took an online course, or you read a textbook, and they say, yeah, this is how you should read the market. You get a trend down, pull back, trend down, pull back, trend down. Now, yes, in truth, that is how the currency pair or the foreign exchange moves. Okay, you get a trend down, you get a pullback, you get a trend down. Perhaps people will say it's a continuation, a correction, a impulse move, whatever. Okay, it's basically a trend down, pullback, trend down. Now, as easy as that sounds, it's not, okay? Because the way the foreign exchange market really moves, and we covered this in part 1, is like this, okay? You will have a trend, like you'll have something like this here, okay? And then you'll have something like this here, and you're like, what is going on here? And then you probably come back here, probably up there, back here, and then you might have this here. Okay, so yeah, in truth, this is what the foreign exchange moves. This is how it moves. And what we need to do is identify, first of all, where is the order flow? Where's the orders coming? Is this an uptrend? Is it downtrend? Where are traders buying and selling? Now, what we want to do is, first of all, mark up the key points, okay? What we want to do is just forget the messiness on the charts. Just strip everything back and focus on what is actually happening. Okay, I'm going to mark this with red here. Okay, now what we've actually got, okay, and again, this is something you will learn over time, is if we forget all the noise here, all the pullbacks, all the highs and highs, we have a downtrend. So you can see here we have a pullback, we have a downtrend, we have a pullback. Hold on, let me just move the camera. We have a pullback and we have a downtrend. Okay, so stripping back all the messy volatility, all the noise from the candlesticks, this is the downtrend, okay? And as you can see here, we've got our low just round here, we've got our lower high, we've got our lower low just there, we've got a lower high, we've got a lower low, we've got a lower high, okay? So by joining the dots, you can see that this is a downtrend, okay? And within this downtrend, okay, you will have micro trends as well. So as you can see here, we actually have an uptrend on the, I'll make this blue so you can see it, okay? We actually have micro trends. So you can see here, this is an uptrend. I'll make that, I'll make it yellow, there you go there. We have micro trends. So you can see here, this is an uptrend, that's an uptrend, that's a higher low, that's a higher low. Okay, so within price itself, we have a downtrend and we have an uptrend. And what we want to be able to do is identify these levels. Now, the institutions are going to be buying and selling at these levels here, okay? They're going to be buying and selling at these levels because they're looking for the big moves, okay? They're looking for the areas, the levels on the higher time frame, supply and demand levels, where they can enter and exit trades. Most institutionals, most banks are not really trading the lower time frames, okay? They're not really trading the 1, 5, perhaps maybe they might trade the 15. And the reason being is because they're taking such large positions, okay? Their trade sizes and their spreads are enormous, okay? They won't be able to get the movements off the 1, 5, and perhaps 15-minute time frame. So what the institutions are doing is they're looking at the higher time frames, the monthly, the daily, the weekly, perhaps even the 4 hour as well. And they're using these key levels to look to enter and exit trades. They're not interested in 5, 10, 20, 30 pip moves. Okay, what they want is the big swing trade moves, the 50, 100, 150, 200 plus moves, okay, because they have large accounts, they have large trades, and they need those kind of movements to make money, okay? So what you'll find with institutions is they will take large positions here and they will take large positions here. They will look at the overall direction of the flow in the market and they will look for levels on which to ride that trend, okay? Now, again, as I mentioned earlier, we've got something called micro levels, okay? So these are realistically where the retail traders are taking their trades. So, you know, what the retail traders would perhaps do is they'll see a downtrend like this here. And then what they would do is they would see, this is an uptrend. They'd see the higher high, they'd see the lower high, they'd perhaps buy here, ride the price up. They'd wait for price to come back, they would buy here. So this is realistically what's happening on the lower time frames. You've got these micro trends where all the retails are buying this particular currency pair thinking it's an uptrend, and then all of a sudden, bang, retail comes in, institutional comes in, drives the price down, stops everybody out, okay? Now, they're not stopping people out because they're manipulating price. It's just simply you need to know when is the right time to enter and exit trades, okay? Now, let's go into it a little bit detail now, furthermore, okay? Let's strip it back even further and look at looking at what we actually see. Now, you have to remember when we're trading, okay, price will trend, okay? So basically you have three moves in a currency pair. You've got an uptrend, a downtrend, or consolidation, a range, okay? So a downtrend will look something like this here, an uptrend is going to look something like this here, and a consolidation or range is going to look something like this here, okay? So pretty much those are the three moves, okay? You'll only ever do that thing. It'll either go up, down, or sideways. I think you can't go backwards. It can't go in the opposite direction. It can only go forward, and it can only go in those three directions, okay? Now, you have to remember one thing as well. I want you to take note of this. Take a little pen and paper. If price is in an uptrend, it's going to be breaking resistance, period, okay? Remember what I said in part 1. Support and resistance won't work 100% of the time, because if it did, price would be stuck in a range on the 1 minute time frame. Imagine this is the 1 minute time frame now, and you've got a support line here and you've got a resistance. If support and resistance constantly held, it would just be stuck like this, up and down for its whole entire life. It just wouldn't move. Now that can't happen, right? Because you're going to have buying and selling pressure, okay? Eventually, this level is going to be broken, okay? So support and resistance is not calculated, it's not programmed to work 100% of the time, right? Because it's just not how the foreign exchange works, okay? But we need to understand that. And what we need to understand is when price is in an uptrend like this here, right, it will be breaking support and resistance. So imagine, I'm just going to draw a few lines like this here, okay? I'm just going to draw it like that there. And just imagine now that this is support line, okay? This is a support line here. So I'm going to write it down. Give me a sec here. Okay, I'm back. Right, okay. So imagine we've got support lines here, Okay, now the way price moves is it will bounce between areas of structure, support and resistance. So give an example here, right? If price is in a downtrend, right, what's going to happen, right? Which is going to likely to hold, support or resistance? Resistance, okay? Take note of that. If price is in an uptrend, support will hold. If price is in a downtrend, resistance will hold. So as price comes down into a support line here, okay, the likelihood of it being broken is pretty much an 80 or 90% chance. Okay, it's going to pull back like this here and it's going to break. Okay, then price will break it, it will pull back, it will break it. Okay, and that's pretty much how trends work, like this here. Okay, now obviously, like I explained in the previous example, this is an easier example. In reality, it doesn't work like that. You have a downward movement like this here, you'd have a kind of pullback like this here, like that there, then it will come down like this here, perhaps do this, come down, zigzag up like this here. Okay, but realistically, that is how price works. Okay, and again, it doesn't really matter which one you look at. They're both exactly the same. Okay, you've got your low there, you've got a lower low, a lower low, a lower high. Again and again, even on these small pullbacks, you're going to have micro trends as well. Now let's jump on the charts and let me give an example of what I mean, because I know it can be a little bit confusing what I'm showing you here. Okay, but let's jump on the charts and I'll show you exactly what I mean. Okay, so let's go over a live example now of what I've been teaching you on my grey board. Now, yeah, what I want you to do here is just focus on the bigger picture. Don't look at the little candlestick patterns and what the little insy wincy bits are telling you. I want you to actually step back now and look at the bigger picture. What is actually happening? Okay, Euro USD is in a downtrend. I'm looking for sales. Believe it or not, that is actually as simple as it can be. A lot of traders try and overcomplicate this. I've taught thousands of people and thousands of traders, and yeah, they've took an idea that is very simple and they made it very complicated. And I've gone, wow, you've made that very complicated. You took something that was simple and you've just confused yourself now and overcomplicated it. The biggest battle you'll have in trading is with yourself, your own emotion, your discipline, how you handle trading itself. Sometimes you might get frustrated and change strategies. And yeah, the biggest downfall is yourself. Trading is very simple, okay? If it's a downtrend, you want to be selling, okay? Because you want to be going with the flow, the momentum, you want to be going with everybody else. Now, there is a rule of thumb in trading, or there is a theory in trading, that the higher time frame support and resistance will be respected. Now, why is that? Now, the simple answer is because everybody else is seeing these time frames. You have to remember, right? Support and resistance are areas where buyers and sellers will get into the market, okay? So on the higher time frames, the candlesticks move a lot slower, especially if you're on the 1 hour, the 4 hour, the daily, the weekly, the monthly. These time frames, they take ages for price to move. If you're on the weekly, it's literally one candlestick is each week. So support and resistance will get respected more on the higher time frames because everybody else is seeing it. They're waiting for price to come up to a support level or down to a support level, and they're going to be buying from it. Everybody else can see it and everybody gets into trades around these levels, and that is what moves price. So higher time frame support and resistance get respected. The lower time frames like the 1 and 5, not necessarily, because they're not a lot of traders are trading those time frames. They tend to look at the higher time frames. So whatever kind of style of trader you are, whether you're a swing trader, scalper, I trade the 1 and 5 minute time frame, so I'm a scalper, but I will always have the 1 hour on my toolbox. I'll use the 1 hour as support and resistance, and then I'll scale it down to the 1 and 5 minute to look for entry points. So whatever kind of trader you are, you definitely want to be looking at the higher time frames. If you are like me, a scalper, 1 and 5, trading off the 1 and 5, you don't necessarily need to look at the weekly and monthly because that's on the other end of the spectrum. If you're, imagine time frames a bit like this. You've got the 1 and 5 down here, and you've got the weekly and monthly over here, right? You don't want to be looking at the monthly and then trading off the 1 minute because you're forgetting the bit that's in between, right? It's nothing. It's not going to work because the monthly might tell you it's an uptrend, the 1 hour might tell you it's a downtrend, and the 1 minute will be telling you it's going sideways. So what is it? Okay, now I could cover this. I could write a whole new course on different time frames, but what we'll take from this is always have one higher time frame in your toolbox. So for me, we've got the daily here, but when I do my trading, I really have the 1 hour. I take my trades off the 1 and 5, and then I will look at the 1 hour for my support and resistance levels. Now, like I said, okay, price will move in structure or move something like this here. Now, this is a live chart here on the daily time frame. Candlesticks are moving. Obviously, it's the daily, so you know each candlestick takes forever to move. But I just want to mark up the areas of interest, okay? And I want you to take note of what I'm saying. Now remember, this is the daily time frame here, okay? So I'm just going to pop this like this here. And I'm just going to pop this like this here. And there we go here. So remember, this is the daily time frame. These candlesticks take ages for price to come up to these levels, which means everybody else is seeing these same levels as well, which means everybody's getting ready to get into trades. Now, what I've done here is exactly how you draw support and resistance. What we're focusing on here is what is happening on the charts now. A lot of traders out there will draw their support and resistance. They'll say, okay, you need to look back in the charts. Do not do that. If somebody teaches you to do that, that is the wrong way. And the reason why is because if I just bring up a random line, I'm just going to plot it here, right? If you go back in time here, right, you will see somewhere, oh look, here we go here. See how price, here we go here, we have a nice little break and retouch. Look, nice little support. Price comes down, retouches it. Now that is not magic, right? That's just me plotting a random line on my charts and waiting for price to respect it. That's not how you draw support and resistance, because this happened in 2019. Today's date is today's year is 2022. I don't care what happened in 2019. It was a different date, different year, different environment. You know, the whole market was different back then. I don't care what happened back then. What I care about is what is happening now. And that's the most important part, okay? You want to know right now which levels are going to be respected and which levels are not going to be respected. So as you can see here, we have a typical downtrend, okay? So remember, you know, I picked a really clean example here, but, you know, most of the time, you know, this is how trends happen. You know, you'll get a downtrend like this, but sometimes it won't necessarily look as clean as this here, okay? But we have a downtrend like this here. We have our low just there. See how it bounces off our support? Price comes up here, creates a high, comes down, creates a new low. Okay, then creates a lower high. So you can see here all along price comes down like this here. We have this kind of choppy about, comes down, and again you get the idea, okay? And all the way along down we've got lower lows, lower highs, lower highs, lower highs, lower lows. So you get the idea, okay? This is a downtrend, okay? And what we're looking for is we're looking for areas where price is likely to reverse from. Now, the first thing we want to do is identify a currency pair movement. Which way is it moving? Okay, it's a downtrend. Okay, so it's a downtrend. We're interested in it. We're looking for sells. Now, when I draw my support and resistance, is we want to be marking up the areas that has reversed price. Okay, you notice how price came all the way down to this level here and suddenly reversed. That is a very significant level. The fact that price has come all the way down into this level, gone bang, and then reversed. That tells me that, wow, okay, this is a level that has clearly reversed price in the past, or I say in the past, but you know, very recently. I'm looking at this level again for a potential reversal. So always when you're drawing your support and resistance, you want to find really strong areas where price has bounced from it, okay? Clearly just gone straight into it and reversed from it. That is a level that I'm interested in. Everybody else is interested in it. Everyone else can see it, you know, so let's get into trades around these levels, preferably with the trend, okay? So like here would be a really good example of a break and a retouch. Now let's just get rid of this here. And let's just focus on this move here. So as you can see here, right, I'll give you an example here. This would be where most traders would sell. Okay, most institutions would come into the play here because they would look at this here and they say, okay, price is in a downtrend. I can see the previous low. I can see the previous high just there. I can see how that structure got broken, created a new low. It's retouched it. I can see how it rejected from that level before. I'm going to look for a sell here with the trend. Now, this is sometimes that causes confusion. You see the move from here to here, right? This move in the middle is a pullback, right? This is basically a downtrend, pullback, downtrend, yeah? Now, this small pullback move here is, believe it or not, if you go to the 15-minute charts or whatever time frame you want, a lower one, a 5, 10, 15, 1 minute, this, believe it or not, let's have a look on the, it might be better on the 1 hour. Let me try and find it. Okay, here. Believe it or not, this move from the bottom to the top is an uptrend on the 1 hour. Now, this is sometimes where it tricks a lot of traders because they look at this now and think, price is in an uptrend, right? Price is in an uptrend. Because they, you know, if we just break it down to the 1 hour now, you can see the exact same patterns appearing over and over again. Okay, we've got a nice little uptrend, creates a new high just there. Okay, new high. Price pulls back, which is here. Price then creates a new high, which is there, and then pulls back again to this level. See that? Now again, if you focus on this move here, see again how price significantly reversed from this level. So that tells me in the back of my mind, this is like a window into the future. It's like, okay, price has now reversed from this level, quite good. It's broken because we know the reason why it's broken is because of the higher time frame support, which is at the bottom here, right? Driven price up, price has then retouched this level, and this is where you get strong buying pressure, right? And then again here, price comes up, pulls back, pumps up, yeah? So you start to see and break down what is happening on the charts, right? And then we come up to the 1 hour resistance. Now this right here, right? And this is sometimes where traders call this market manipulation, but it isn't, right? This area here is probably the worst place you can trade. And the reason being here is we already know that this is a small pullback trend. So this is a micro trend on the daily time frame. So this is a pullback, right? What you've got here is you've got people buying on the 1 hour, and on the daily you've got people selling. So now you've got a fight between the buyers and sellers. Now you don't ever want to get involved between buyers and sellers because you're just going to be took out whichever way. You're going to get buyers that are buying here, right? Because they think it's an uptrend on the 1 hour, driving price up. Price comes up, then hang on here. The sellers want to come into play because it's come up to the daily resistance. They take out the buyers, right? So now the buyers are thinking, great, I've lost my trade. Then the buyers want to get back involved again because they think, hang on here, it's still an uptrend. So they buy it again and take out the sellers. So now the sellers have been took out, the buyers have been took out. It's like, what is actually going on? The sellers come back into play here, drive the price back down. The buyers now think, hang on here, price is in a range. So we're in a range now, I'm going to buy from that range. And then drive the price back up, and then eventually the sellers are going to win. Why are the sellers going to win? Because it's the higher time frame, it's the daily resistance. When you go back to the daily, you can see which one is going to win this one. Okay, it's going to be the traders that are trading off the daily, right? So when you go back down to the 1 hour, it starts to make sense, right? Hold on here. Where's my? Here we go. Here. Let me get it back here. Again, we got here. So what you end up having is you have this nice little break below here. You have a nice little retouch, take a sell, bang, price drops. Okay, so as you can start to see now how price works on multiple time frames. So the first thing you want to be doing is, first of all, go to the 1 hour time frame or the daily, whatever time frame you want to have in your toolbox, and go, okay, what is the direction? of that currency pair that I'm going to be trading. Okay, it's a downtrend, I can see. I'm now going to mark up my levels that I can see where price has reversed from, where traders have bought and sold from. As soon as you mark up these levels, you scale it down to the lower time frame, and you want the lower time frame to be telling you the exact same thing. Now, what I mean by that is, let me show you a live an example with my simulator. Okay, and so what I've got now is that right? You know what? There we go. Let's go with that one. Okay, so what I've got now is Euro USD on the 5-minute time frame on the left. I've got Euro USD on the 1 hour time frame on the right. So the 5 minutes is what I'm going to be placing my trades off. The 1 hour is I'm getting an idea of what the market is telling me. Okay, so if we just have a quick look at the 1 hour, let's just have a quick look. Okay, right. So let's just make myself a little bit smaller. And again, let's just keep it simple. Keep it simple, right? We're just going to look at trends. We're going to look at higher highs and higher lows, and we're going to mark up areas where price has reversed from. Okay, so the 1 hour charts is, first of all, I can see that price was in a downtrend because we've got our low just here. Okay, price has pulled back just here. It's created a lower high. Price has come down, and really it's been going down since. Okay, but it kind of looks like it's struggling at this support line here. So it's like price is trying to slow down, but it's not. It's kind of a bit messy at the minute. Price has come back down to this level. Okay, then we've come back up. So we've come back up to this resistance. Okay, and now we've come back down. Now what's going to happen next? Right, and this is where you want to start to identify key levels. So first of all, let's identify this level at the top because price has reversed from it before. If you look left, you can see it just as well here. So that's the level that I'm interested in. And I also want to mark up this level just here, right? Because I think, okay, price has reversed from it as well. So looking at what's happening right now, we're in a range, can't you? You see how I've broken it down is that we had a sell-off, price has kind of tried to go down a little bit, and now we're stuck into a range. So nothing's really happening. We're not in an uptrend, we're not in a downtrend, okay? So we're currently stuck in a range. So let's do this bar by bar, okay? So we've now broken previous structure, okay? So we've now broken the new high, the previous high. So this was the previous high, okay? That was the previous low. That was the previous high before that one, and that one. So you can see how we've gone into a downtrend, right? But it looks like now we're slowing down, doesn't it? 1, 2, 3, 4. Okay, so are we going to create a new high? And this is what we're doing, okay? So it looks like we've pulled down to this support line here. It looks like we've created a new high, which is just there. We've come down to this support line and potentially a break and retouch to the upside, potentially. Let's see, right? Let's see. Okay, so we get a big sell-off. Okay, so that explains that one. Okay, so we know why we've got a big push up here, because a lot of traders now seeing that new high being formed on the 1 hour, and they see, bang, price, you know, this is why this has happened. Big buying pressure here because they've seen the new high, they've seen the previous high and thought, great, buying pressure. So let's see how far this comes up. Okay, right, so let's now mark up this point just here, because this is now the new high in the market. Okay, we've got a new high in the market now, so we should be having now a potential pullback. So we might be pulling back to this level here now. So let's see what happens, right? So price bounces off this level, so it could be a possible buy just here. See if I just get rid of this area just here, can you see how what I'm seeing now on the 1 hour? You see this uptrend, pulls back, new high, pulls back, new high. Yeah, can you see that? Now, if we go to the 5 minutes now, this might be a bit clearer. Yeah, you see this now on the 5 minutes? Okay, breaking it down. So I'm now looking for potential buys off the 1 hour because I know we've broken the 1 hour previous high. We've created a new high. I'm now looking for a potential pullback, right? So as you can see here, you know, like I said, this is always messy, but you know, it is what it is. So there's that 1 hour support, okay, and you can see how price kind of went kind of trending down like this here, you know, you get the idea, right? Then we had on the we then had on the 5 minutes, we had this area here being broken. Now we've seen this on the 1 hour, right? We've seen this area just here, which is, if you look left, you can see the resistance. We can see how we broke it, retouched it. So you can see a new high got formed there, retouched it, bang, big buying pressure, price comes up. Okay, now I'm marking up the next area. So I'm just going to pop this like this here, and it now changes, right? You see how it's changed, and notice why I've moved it from there, okay, to there. Now the reason why I've done that is simply because, remember what I said, this has moved price. Price has come up to it, it's come down to it, it's bounced off that support line which was initially there, driven price up. So I know when price comes back down to this level, okay, that it's respected price before, it's held price before, it's now going to it's now going to hold price to the upside. So when I go back now to the when I go back down to the hold on, let me take it back to the 5 minutes, okay, and I see price coming, I see price like this here, okay, and I see price coming here, and I think, okay, it's going to come down, 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 bang, touches this level. As soon as it touches this level, I want to see what price does. Okay, if we go back to the 1 hour, it's touched that level. Let's go back to the 5 minutes. Okay, it's rejected from it. Let's carry on. Okay, so it comes back down like this here. I'm still not going to enter a buy, and the reason why I'm not going to enter a buy is because we have a little area just there. So that little area just there, see that? I want to see if we break to the upside on this one. Okay, and eventually, bang, there we go. There, we've just broken that one. This is, by the way, this is really kind of fine detailing. This is what I'm showing you here is years of experience, right? This is like micro support and resistance on the 1 minute time frame. But you see how price is in a range, right? This is literally on the 1 minute time frame. It's literally on a range. As soon as we break this, we're going up, because I've got everything in my favor. If you go to the 1 hour now, you're going to have a big candle here, right? I've got the 1 hour where people are going, okay, I want to buy this because it's an uptrend. Okay, you can see here we had our potential support line. Price comes up, comes down, comes up, comes down, comes up, comes down. Yeah, you see that? Okay, and we go back down to the 5 minutes and watch how price will rocket up from this level. Big move up, bang, perhaps coming back down to retouch it, perhaps coming back down to retouch it, retouches it, bang, bang, straight back up. Okay, see? You see how it comes back down? So even this, and this is what I'm glad that this setup appeared, because you can see how we can see stuff happening before it actually happens, can't you? It was like, I knew that was going to happen. You can almost, it was textbook trade, wasn't it? You could see it happening, and it's not like, oh, I don't know what the market's telling me, you know, am I gambling here? No, it's just about reading the charts and seeing what I'm seeing. Now let's take it back here, right? Now obviously we'd take a trade here, you know, I'd be taking a trade as soon as we perhaps close above this here. I'll be putting a stop loss of around 10 pips, and do you know where my target would be on this one? Oh, I don't want 10 lots. And I would target the top here, right? So I'd have a target of perhaps 40 pips. So a nice 1 to 4 scalp. Okay, so my target is the top of the zone here. That's where my target is, the top of this zone here. So again, price comes down here, and again, see how my support price is below my support, so it's protected, right? And then bang, just rockets up like this here. Okay, now notice now how price has slowed down at this level here. See that? Now that's normal, because we expect price to slow down at this level, because we can see price has slowed down from it before. You know, price came up to it and it's bounced off it, so we're expecting to see that again, right? So that's normal. We don't panic here. It's happened before. We can see it. It's fine. We want to then look at the 1 hour and see what the price is telling us. Okay, so again, it's at that 1 hour support, right? So where is now, we're going to go to the 1 hour and we're going to mark up the next key area of support and resistance, which is going to be here, right? You see here, See how we got a resistance here? So we could be a little bit cheeky and hold this trade to the top here. That would be a really good trade, wouldn't it? Lower time frame entry point, higher time frame target, right? Let's see what happens, right? Now, normally I would take profit here, okay? So I'm not going to take profit. Normally I would. I'd normally take profit here. I'm in and out. I've made my money and that is it, okay? Because I'm a scalper. I'm not a swing trader. It's not my style of trading. I like to make my money and move out. You know, within 5, 10, 15, 20, within 25 minutes, I would have made a nice little 2 or 3% gain on my account off one trade. That's my style of trading. But for the sake of this video, I'll hold this trade to the top, okay? So let's keep an eye on it, right? So it's bounced off this resistance. We know it is, but we could still... Okay, so price is pulled down here. Price is pulling down here. Are we going to break this support at the top here? Okay, that's the key thing here. So price comes kind of going sideways. As you can see here, prices bounce off this resistance. We knew that was going to happen anyway, so we could have actually took a sell back down, but a little bit risky because the 1 hour is telling me to buy. Okay, so at the minute nothing's really happening. Okay, we've got our new high being formed, which was there. Okay, there's our previous low. Now notice how price came to the same level, so nothing's really happening at the minute. We've got our low here, we've got our high. Which one is going to be broken? And that will tell us the direction of the next move, shall we say? Okay, so kind of still going sideways. Okay, so price stops me out. Now this is the interesting part, okay, and this is something that I want to teach you as well. We stopped out, but I mean I would have closed the trade off anyway. So it's irrelevant about that trade. Is here. You notice how I marked up, what was it? Here, we marked up here, right? And again, this is micro trading, right? We've got our high here, we've got our low here. Now, as well, if we actually go into it detail, we've got highs and lows here as well, right? Micro trends here, right? Again, I'm just going to mark them up as well here. And I'm going to mark up the little support lines here. So there's a support, there's a resistance just here, okay? Price is and this is something I want you to see as well. Price is giving me the signs. There's our low, there's our high. Price is getting squeezed here, but look what happens, right? Look what happens. Let's just close this trade off, okay? We closed it off. Look what happens, right? So price comes down to this support line here. And again, we've got our big high, we've got a big swing high here, we've got our swing low here, right? And as well, if we zoom in, we've got our lower highs there and a lower low there. Keep an eye on what happens, right? Remember, this is the previous micro low, okay? See what happens. Price comes down, creates a new low, retouches it, retouches there. Watch how price drops again from this level. So it's telling me which way the market's doing. We've gone into a range and we've broken that range. We've retouched it and see how we drop. Bang, ready? We come all the way down, see? So we see what's happening now. Now the next question is do we come back down to this level? We see how price has bounced off it from 4. Is it going to come down to this level? Let's see what happens. No, okay, it breaks to the upside. Now, the reason why it broke to the upside and created new highs is simply because of the 1 hour. The 1 hour came back down and retouched it. See that? So this is sometimes about micro trends and the bigger picture. The bigger picture was always buys. It was always going to be buys because on the 1 hour, you've got the typical new high, pullback, uptrend, lower low, higher low, uptrend, bang, right? Typical. You've seen it happening, yeah? Right? On the 1 hour, that was always going to happen because everybody else is seeing the exact same thing. When you go down to the 1 minute, the 5 minutes, obviously you got these micro trends here, you know, so literally if you're a smart trader, you would have potentially bought this to the upside here, okay, perhaps waited for a sell here from the double top, took the price back down, then took it back down again because we had a break and retouch of the previous low, which is there. And as soon as price came back down here, you would have thought, great, I'm buying again, and off I go. So you can see why we had a big buy off from this level, okay? Now what we're going to do is that is a brief kind of introduction of support and resistance, and this happens literally all the time. If I just bring up a random currency pair now, let's look at okay, so let's finish this off with an example on US 30, because I want to show you exactly that this happens all the time. So look at your USD, look at US 30, because US 30 is perfect for break and retouch, right? So let's just keep an eye on US 30 here, okay, and see how price constantly gets respected, okay? See how support and resistance constantly gets respected here. So again here, and again perhaps here as well, and probably even take one just here as well, okay? There we go there. Okay, so let's first of all keep an eye on price. Okay, let's keep an eye on price. Let's see what it does, right? So again, we'll take it back to the bare minimum. Let me put myself up here, right? So as you can see here, we're in an uptrend. There's the previous high, there's the previous low. New high gets formed because it's higher than this one here. So we're looking for a new low, which is there. New high then gets filled here. So again, we create a new high. It, obviously beating this one, it retouches, bang, you buy. Price comes up, it then comes down. I've actually drawn that wrong. Let's draw that just here again. There we go there, okay? I've now redone my support and resistance level, okay? Price has created a new high, it pulls back, it creates a new high, it pulls back, we buy, right? So you can see all along, right, what price is doing just by simply looking at the direction of it. Look at the highs and lows and lower highs, and let's just end it here and say which ones are likely to hold, the resistance here or the support. Obviously the support, because it's an uptrend, and eventually price is going to come up into a downtrend like this here. So again, just to prove my point here is, again, we've got that area at the top here. So again, this is where buyers get trapped out, because again, price creates a new high here, it pulls back, you buy from this here. Then price creates a new high, then you've obviously come up to the 1 hour resistance or the daily resistance. Just to prove my point here, let's have a look if that's the daily resistance. So let's have a look. Yeah, it is. Okay, so there is that daily resistance just there. Okay, so again, big sell-off from this level. You can see how price came up, it came down, and again here how price came down to it and bounced off it. So price came up to this level on the daily and literally just sold it. And what you get here is, where's that price again? Is what you get here is you get that area that traps buyers and sellers. So you would have had buyers buying here, you then would have had sellers selling here, and you get this kind of mishmash between buyers get took out because sellers drive the price down, then sellers get took out because the buyers drive the price up, then price zigs around for a bit, then it creates a new low which is there, then it retouches that previous low which is just here, retouches it, bang, price drops. Simple, isn't it? Right? Simple. Then price continues all the way down. Big sell-off here. We know there's a big sell-off because the 1 hour is telling us to sell here. The daily was telling us to sell here. Price comes down, price comes down, price comes down, price pulls back, drops again. See? It makes sense, doesn't it? So that's, in a nutshell, support and resistance. Now, what we'll do in part 3 is we'll go into it in more detail. We'll start to or was this part 3? No. In part 3, we'll start to simulate it more, and we'll start to what we'll do is we'll just press play on the simulator and we'll break down what the charts is telling us, okay? Seeing what price does when it goes into uptrend, how it reverses, it goes into a downtrend, how it reverses, go back into an uptrend, and we look at the highs and lows, we look at the support and resistance levels, seeing which ones are going to hold, which ones are not going to hold, and then we can take back-to-back setups. We can buy with the trend, we can see all the traders get manipulated accumulated and stopped out. We were patient. We wait for price to make its next move, perhaps some more to the upside or the downside. As price makes its move to the downside, we can then sell, ride the price with the trend. So break, retest, sell, break, retest, sell, and vice versa. So yeah, I hope you took something from that video. My name's Jeremy Palmer, and I'll see you in the next video for part 3.